All right, you guys, welcome to this pre-recorded webinar brought to you by Limitless PH Trading Academy and, of course, NordFX. In this session, I'm going to show you exactly how to start trading in 2026, even if you're just a complete beginner. So what I'm going to do here is try and simplify everything for you. And hopefully by the end of the session, you'll understand how trading actually works, how to enter the market properly, and most importantly, how to avoid, the most common mistakes that I've seen that wipe out a lot of beginners. My name is Tariq Gutierrez Tensuan, also known as Coach T. I'm a professional forex trader and the founder of Limitless PH Trading Academy. Been in the industry for more than 10 years now, and I've worked with a lot of beginners. So what you will learn today, here's a breakdown of a few things, a few basic things that we're going to try and cover. First of all, I'll break down how trading actually works. Then we'll also go through different assets that you can trade. And then after that, I'll show you how trading actually is performed using the platform itself. Then I'll give you some examples or simple beginner strategies that you can execute. So let's start with a very basic question. What is trading? Trading is simply buying and selling an asset to make a profit from the price difference, from the price movement, or what we call the fluctuation. You're not here to hold long term like traditional investments or investing. You're here to take advantage of the price going up or down in the shortest amount of time. Big difference between investing and trading. Trading is just all about trying to make or take advantage of the price movements in the shortest amount of time. Depending on the strategy that you apply, depending on what kind of trader you are, because there's also different kinds of traders. I'll discuss more on that later on. But yeah, most of the time, it's just short to mid-term holding of trades. So you're here to take advantage of the price going up or down. And this is something a lot of beginners don't understand. You can make money from both directions. Whether the market goes up or down, there's always an opportunity for you to make profit from. Of course, the best part is you can do this anywhere. As long as you have your internet connection, laptop or a phone, you can perform trades. Right? Again, I'll show you later on. And one of the best parts about Forex trading is it's open 24 hours a day, 5 days a week. So how does the market actually work? It's very simple. The main concept is just supply and demand. That's what make the prices move. So this is economics 101. When there's a lot of demand and not enough supply to match with the demand, then obviously the price goes up, and vice versa. When there's a lot of supply and not a lot of demand, then the price goes down. So when people are buying, obviously the price goes up, and when people are selling, then the price goes down. That's it. This is why the market is always moving. And when there's movement, there is an opportunity. So what are the assets that you can trade? Not only forex pairs, they get, precious metals, commodities, cryptocurrency, and like I said, indices. An example, you have forex pairs like Euro USD, GBP USD, and this is the most liquid market in the world in terms of liquidity. Forex is the most liquid one because it's trading about $7 trillion per day. Also, you have gold, silver, which are considered the safe haven assets. You also have commodities, oil, which react strongly to global events like recently. And you have cryptocurrency. So why these assets matter? Each of these assets they have their own advantage, right? So Forex is more stable and more liquid. Crypto moves fast. So there's more opportunity, but also there's a lot of risk. Remember this, when you're trading or investing, there's the general rule, right? It's always about risk to reward. So when you're risking more, you're probably having more probability to have more rewards. But also vice versa, if you want to have more rewards, then you have to take more risk. That's generally how it works. Gold is strong, especially during uncertain times. Gold is one of the safe havens. Like right now, you'll see that gold is really soaring high because of what's happening in Iran and US and Israel. Indices give you more exposure to overall market. As a beginner, forex is usually the where to start, or gold. A lot of traders like trade gold. It's a lot more liquid. There's a lot more movement, so you can make more profit in a shorter amount of time. But like I mentioned earlier, remember this: When you want to make more profits, you have to take more risks. So how does profit work? The basic concept is very simple. You buy low, you sell high. But in trading, you can also sell high and buy low, okay? Because you're buying CFD contracts here. CFD means contract for difference. So when you're trading CFD, you're not necessarily buying the actual asset itself. You're buying the contract for the difference between certain time to a certain time. It's not just limited to one direction. That's actually what makes trading more powerful. So let's say, for example, you're going to buy Euro USD. We use pips, we call it pips, price in points, to compute for the price differences because currencies fluctuate. And technically, in real world actuation is very little. That's why you use leverage. You want to multiply the trade size that you're taking, so you make sensible profits out of that. And that's where the brokers come in because they provide you the leverage. So in a currency pair, there's a base currency and a quote currency, right? So the base currency pair is the one that you're buying using the quote currency, and vice versa. When you're selling or shorting, you are selling the base currency and you're buying the quote currency. In this example, in Euro USD, if after all your analysis using technical analysis and fundamentals, if your bias is that Euro is going to go stronger than US dollar in this amount of time that you're taking the trade, then you go buy. But on the other hand, if you think that Euro will lose its value against the US dollar in the amount of time that you are in the trade, then you sell, right? Simple as that. So in this example, when you decide that Euro USD is going up and you buy at the price of 1.05, then it goes up to 1.055. So that's a profit of 50 pips. Now, on the other side, if you think that Euro is going to lose its value against the US dollar because in this time frame that you're taking the trade, US dollar is going to be stronger against the Euro, then you can sell, which you're betting against the Euro and you're betting for the US dollar. So same thing applies. If you sell it at 1.055, then you close the trade at 1.05, then again, that's a 50 pip profit. So let's talk about leverage and the capital. This is where things really get interesting. You don't really need a huge amount of money to start. So with leverage, you can control a larger position with a smaller capital. For example, if your leverage is 1:100, so most brokers would offer anywhere between, so most CFD brokers would offer anything between 1:50 to 1:1000. So that means $100 can control 10,000. Why? Because for every $1, you have a leverage or buying power of 100. So that means if you have $100 times 100, that's 10,000. The problem is, here's the reality though. Leverage is a double-edged sword. What does that mean? It can grow your account really fast, but it can also destroy it. Planning on taking more rewards, then you are also simultaneously taking more risks. That's where the lot sizing really help you a lot. Warning on the leverage use. That's why almost all brokers would have this leverage warning when you start creating an account with them. And this is one of the reasons why trading has to be regulated strictly. High leverage, a small move that goes against you can wipe your account. Live trading introduction. So this is where you see an actual trade being executed using MetaTrader platform. We have two types of platform that we use right now that are both MetaTrader. So we have the MT4 or MetaTrader 4 and the more updated version, which is the MT5 or MetaTrader 5. If you want a more updated version and more tools that you can use, then obviously MT5 is for you. So first, let's just talk about the platform overview. Probably 70% of retail traders are using the MetaTrader platform. Opening a trade is very simple. So first, you choose an asset, analyze the chart. First of all, there's two major assessment methodologies. So you have technical analysis and fundamental analysis. Okay, so what does that mean? These are the most common two ways to basically predict, quote unquote. Again, we're not predicting here, we're just reacting to what the market shows you, what the chart shows you. So technical analysis is a way to understand a certain asset using the price movements or using the patterns that you see in the chart. What most people don't really realize is what the chart shows you is actually a story of how traders are reacting to that certain asset. So where they buy, where they sell, the most common ones, you have the support and resistance. When there's a certain level that traders mostly buy from, becomes a support, and when there's a certain level traders mostly sell from, that becomes a resistance. Technical analysis is all about chart reading. It's all about patterns, and these patterns actually means numbers. It's about the story of the context of that currency pair or the asset in general. Fundamental analysis is all about news, geopolitical events, economic data, most importantly. All countries, especially with the major currencies, are required to publicize their economic data, especially if their currency is being heavily bought or sold in the forex, in the interbank or in the forex market. You have a couple of websites where you can check in terms of like which currencies specifically or which countries would have a news that would impact their currency on a given day or on a given time. And again, traders react to that. So that's how fundamental analysis works. So you have to combine both of them. Now I'll show you how this actually looks like in real trading. Pay attention to how try to analyze certain currency pairs and how you manage the trade. And because this is exactly what you should be doing. So this is what MT5 looks like. Like I said, this is the updated version of MetaTrader. This is the platform where you can analyze the chart and make your trades simply by clicking sell or buy. This is a more updated version. So if you are just starting to trade, then I would recommend, use MT5. So you get used to it. But if you've been used to using an MT4, then, just use MT4. Let me just show you just a little bit of how transactions are processed here. Like I said, a very basic one. If you are a beginner trader, the most common ones that I'd say methodology that you need to have is understanding the support and resistance. So again, support and resistance. So let me just draw a line here so you understand a little bit more. In MetaTrader, or at least in trading itself, the horizontal equivalent of a chart or a data is the price. And the vertical one is the date. So wherever it's pointed at horizontally, that signifies the price. And wherever it's pointed at vertically, it's giving you the date. A bar, let's say there's a bar there, regardless of the color, bullish bar or a bearish bar. By the way, in the way I set up MetaTrader is green means bullish bar, red means a bearish bar. So a bullish bar means that the price closes the higher than the opening price. The bearish bar means that the price closes at the lower opening price. So I'm still using the red and the green one. It's very traditional. You can again customize it your way. If you don't want to see colors, you can also do that. Okay, that being said, this is it's called a bar. We are currently on the daily time frame, so you'd see the time frame here. So that means every one bar is 1 day. So again, understanding the support and resistance simply means that you understand where a certain level or a certain price gets touched and rejected just because probably, a lot of traders are putting orders on that level. To simplify it, it kind of looks like this, right? So when this price gets touched, it bounces back. And when this price gets touched, it bounces up and down and up and down and up, so on and so forth. So this becomes your resistance. I'm not going to write the whole thing, so, we make it faster. And this becomes your support and resistance. So your support is basically a certain level or certain price where whenever the price or whenever the market touches that level, it rejects and goes back the other way. That means you have a lot of buyers there. This is what you call the buyer's area. And then on the other hand, when you have resistance, that's a place where you have a lot of sellers. In trading, you are going to react and not predict. So you react based on what the chart is showing you or the historical data, or you react based on what's going on with the news, geopolitical events, or whenever there's economic data that changes on a certain country. Traders react to economic data. So again, you have the GDP, you have the retail sales, inflation report. Those actually affect the demand for the currency that you're trading. Default option that you have as a trader is always go back to technical analysis, because the chart is always going to show you something. So we're talking about statistics and probability here, right? So you're always just trying to up your game, and you're always just trying to up your probability to win the trade. It's never going to be guaranteed. It's never going to be 100% unless you have inside info or you're an inside trader. As a trader like you and me, as a retail trader, you're only trying to up your level or up your probability by doing some certain analysis that matters. So again, going back, you have the technical analysis and the fundamental analysis to be able to basically make a decision. you have two decisions. Well, I argue that there's always three decisions. So people would always think that there's only two decisions. So this is the way I approach trading. It doesn't necessarily have to be yours, but this is how I approach, because I'm a little bit of a conservative trader. I always include the third option. So people always think about buying and selling, right? But the third option is do nothing at all, or to put it short, no trade. So depending on what strategy you're using or what assessment methodology you're using, that's going to give you your decision making as to whether a certain currency or asset is going up or going down. We see this as an example, is Australian dollar, US dollar. So it's the price of Australian dollar versus the US dollar. As of the moment, it's 0.716. So just by looking at the chart, it's very, very basic that you understand that this is on an uptrend trajectory. It's on a bullish trend, as we call them. That means that the price has been going up for the past couple of months, for the past couple of days, for the past couple of weeks. So it just makes sense that your decision would only be based on just buying this. So this is the distribution phase, or this is the trend, or this is the where the move actually happens. And this is an accumulation phase. And obviously, you've seen some movement on the bear side. But if you combine the fundamentals and technicals right now, then I'm still going to be leaning on the bull side, because as of the time of this recording, more traders and more analysts are leaning towards risk on appetite. So for the longest time, there have been risk off since the beginning of the war. But for some reasons, because of what Trump was, President Trump tweeting, using X, or whatever he was posting in social media, that kind of affects. Anyway, just because I see this on a very basic technical analysis, we're going to put on a buy here. So buying and selling. This is the lot size, by the way, this one here. If you don't want to use this one-click trading, you can click new order, so you can see the actual data and the numbers. So the volume, again, is the lot size. So we talked about one lot and we talked about 0.1 lot. But just for the sake of this exercise, we're going to use one lot, which is 100,000 currency units. And then click buy. And you can press Control T so you can see the trading tab. You can see your actual live trades. So this is where you see the actual profit or loss, the current profit or loss. This is your balance. Obviously, since we pressed on buy, we are, based on our analysis, our Australian dollar is going to be stronger than the US dollar. So what you want to see is this go up. Zoom in a little bit. Let's go to a lower time frame so we can see the actual movement real time. So we are currently on a 1 hour time frame. So that means each bar denotes 1 hour. So this is 1 hour. This is the current bar, which is going to close at 9 p.m. It's currently 8:39 local time. Logically, you want to see that go up so we can close our trade by clicking the X button right here. Or you can also place a take profit, just like that. Just click and drag. And you can also place a stop loss. So this is the maximum loss you're willing to take on the trade. So when you're buying, obviously your take profit or your profit target is going to be above. Green line is where you took the trade. So when we make this trade, or when this currency pair goes up, when we see a bar that goes here, then this is automatically going to be triggered. We're going to make a profit of $61 or $64 because it's 64 pips. Okay. So remember what I said earlier, the currency pairs with USD as their code currency, or the second currency that you see in a pair, that's automatically $10 per pip. And there's computation for different currency pairs. So that's one trade. Let's take another one rather. So Euro USD, my bias right now is against US dollar and pro what you call the risk on currency pairs. We're only gonna buy currency pairs or currencies against the US dollar. Same thing applies for big buy and then drag and okay. And the stop loss, let's put somewhere here. So we're gonna go back to this later on, and we'll see if we make some profit. So far, our balance 11,000. So we took a very short break, but as you can see, still the trade currently is still on the negative side. Again, I only took one lot because that's the standard. But like I said, especially if you're a beginner, then you want to start with 0.01 or micro lot. That's a lot better. So I'm going to show you an example of how, or what's the difference between trading one lot and 0.01. So when you open it up on what I'm recommending you do, let's say on a 0.1 or a micro lot, as we call them, 0.01 rather. Let's do the same buy and then go to Australian dollar, US dollar. Then let's use one click and buy. Okay. So as you can see, the difference in the fluctuation and the effect of the fluctuation to the current trade or the open trade that you have is a huge difference, right? As you can see there, this is on a cent. It's moving on a cents, but the ones that you open in one lot is moving in tens of dollars. You know, you kind of get the gist of what I'm trying to point out here. But as a beginner, I recommend 0.01 most of the time, or as much as possible all the time. Then when you try to, you know, because trading is all about repetition, by the way. You know, there's no such thing as a perfect strategy. And I'm speaking based on experience here. Sometimes when you're starting, you know, in trading, you're always thinking about, hey, what strategy can I use that give me a lot of trades or winning trades, which can make me a lot of money to be a profitable trader. But that's not necessarily how trading works. You know, how trading works is look at this right now. It's currently positive. We're already on a positive trade because the currency pair is going up, and same goes here. Zoom in a little bit. So we are currently positive $18. So you can close that if you're, you know, this is one way to trade, which is called the scalping. You know, trying to make money the shortest amount of time. Obviously, we can't wait within this session for the trade to hit that take profit or target profit. So we're gonna close this at some time, just so you can see that, you know, how profits are taken. So we're currently at positive $38, $35. So it's, you know, moving back and forth. But like I said, you know, you can close that, which we're probably going to do for a certain currency. Once. Okay. So our balance right now is $11,017. So that's how it works. That's one way to trade, but that's not necessarily something that's logical and practical. So there's different strategies and different ways to trade, but I'm just showing you basically how it works in terms of like how profit happens. The only open trades that we left are the most conservative ones, the 0.01s. So you're not really going to see a lot of profit there because it's, you know, conservative trade. So now we're probably going to go over one of the most important things for a beginner like you. Okay, so what's the step one? So the step one is you have to visit the website, the broker website. You go to the website, you open a trading account, you know, you have to get approved. Most of the brokers, you know, would require you to submit your ID, you know, KYC, identification, validate your identity and stuff like that. It's all under the rules of AMLA, or Anti-Money Laundering Act. And even if you open an account with, let's say, $500 account, what you have to do, especially as a beginner, is you also open a demo account. You don't necessarily have to trade on your live account. You can trade on a demo account. So step two is how to deposit your funds. So deposit methods, there's multiple ways you can deposit using with NordFX. You can use multiple options like bank transfer, credit and debit cards, e-wallets, and here in the Philippines, GCash and PayMaya is also accredited. And cryptocurrency, the fastest way to deposit is cryptocurrency. So if you have an e-wallet with cryptocurrency on it or with crypto on it, like USDT, you can simply use that to deposit a fund on your account. So how to start? Practice on demo. This is exactly what I told you earlier. Again, if you want to be realistic, even if you're not able to start on a live account yet, if you don't have an extra fund for that, then you can try to think of what reasonable amount you can start with. Realistically, use that idea or use that as a way to start your demo account. If you're not able to start yet with a live account and you know that you can deposit at least $1,000, then start with a demo $1,000 account. Start with microlots. Like what I mentioned earlier, the general rule in trading is you risk only 1 to 2% per trade. You can't really trade, or you can't really be in a situation where you traded and then the losing side of that trade is like 50% of your account. You have to really practice the general rule, probably at max 5%. So you have the stop loss and take profit, right? So the risk is your stop loss. There's a proper computation on how to do that, but whenever you take a trade, the maximum loss that you can take on that trade has to be 2%. Again, at most 5% if you're really confident, but 2% is like the way to go. Micro lot is like what I mentioned, 0.01. Keep a trading journal. So this is an old practice for traders, and it's still effective. I mean, I still have my notebook that has been filled with my journal. I'm not really the type of person that journals a lot, but you know, it really helps you in trading. You know, you journal the trades, what happened if you lost that trade or you won that trade. Were the reasons controllable or were they not controllable? Was there something you could have done for the trade? Because so I'd recommend you guys take probably a screenshot of this or take a picture of this. So, you know, again, just to reiterate this part, 2% rule, like I mentioned, at max, you only want to risk 2%. The most profitable traders are not the ones who are the smartest. They're the ones who are the most consistent ones in applying their trading rules and methodologies, and most importantly, risk management systems. No matter what happens, try to stay consistent as possible. So avoid over trading. Always use a stop loss. That's number one. And manage your emotions. This is the ultimate key here. It's very hard to apply, but it's a simple thing. It takes time. With proper repetition, you're gonna be able to. Because what I always tell people is you really have to apply your. Even if you're just starting and you don't have a lot of knowledge, you really have to practice the info or the knowledge you're getting as much as possible every day, even on a demo account. Because trading just takes a lot of repetition, and if you have a lot of repetition, everything goes well, and you're gonna be good at reading patterns, and you're gonna be good at not over leveraging your trades and stuff like that. So, common mistakes. What are the common mistakes the beginners make? And this is something I've seen firsthand. Number one, no trading plan. So what does that mean? You make decisions, but you're inconsistent with the results because you don't have proper entry and exit rules. So when you are about to take a trade, you have to remember that you have to have a stop loss and a take profit. First thing you have to identify, of course, is your entry level. So when are you going to enter? What price are you going to enter at? And then the second thing would be the stop loss. Where do you want to take your stop loss? That's, logical and based on, historical data would make sense. And then that's when you have to take your profit. Risking too much. This is the number one account burner mistake that people make. Emotional trading. Like I said, trading based on fear, greed, or revenge trading. This is also one of the things, people, when they make a lot of losses, they start to revenge trade and becomes illogical. The trades mostly based on emotions and not based on logic anymore. That's when you start to lose. So why choose NordFX? They have competitive spreads, so tight spreads starting from zero point 0.0 pips with lightning fast order execution. So educational support, so you have free, resources online you can basically take advantage of with NordFX. So your next steps to success. Okay, your trading journey begins with action. So again, this step one is just creating an account. That's about it. Not even about depositing yet. Just creating an account and having your own demo account. For the questions, you can just type in the YouTube comment. The main website is just nordfx.com. And you can utilize this to, check all the things that you need and, support. There's support here. You can chat support. It's 24/7. And all right. So I guess that's about it. Thank you so much for giving us your time for today. I hope you learned something. Again, thank you so much. This is Coach C, and I hope you have a wonderful day.